Good morning. It's Monday, December 19th, 2022, and it's about 9 o'clock a.m. Pacific Standard Time. So the markets continue to go down. I got a lot of alerts today on the underlying stocks that have made either new lows or just continue to go down. So these markets continue to be weak. There's no strength in this market as far as going up. A lot of strength in the markets going down. And like I said before, you can make more money going down than you can go up, and 10 times faster. So this is a Russell. I kind of follow a Russell only because it tends to be leading the way down. And NASDAQ seems to be right behind it. Still going down. It's kind of slow moving today. My objective is I have some put options on the SPYs, the ES. and actually I bought quite a few only because I got up in here, saw that spike. Like I mentioned before, these spikes are a really good opportunity, and sometimes I have to wait a week or two, and sometimes longer, for these spikes. But then when they do hit like that, then that's when I get in really big, actually pretty good size contracts I got in here going down. And then that would be enough sometimes for a couple weeks or even sometimes a month. Just depends. But because of the volatility, it moves pretty fast, and pretty soon also I don't have to wait that long. So let's see. So this is the NASDAQ. Here's the ES. It's ready to hit my alert. As you notice, I cleaned a lot of stuff up here. I took a lot of these lines out because I'm an intuitive person. I really feel what these markets are going to do. And I'm about, 95% accurate on direction. In fact, I'm pretty accurate, maybe even more than that. Just a matter of timing. Like I said, when you buy options, you have to time this thing pretty close. Otherwise, you could be right and still lose money. So I want to make sure my timing is right on this. As far as knowing where the market's going, I think it's pretty simple for me. It's pretty easy. Like I said, matter of timing. When the market comes up, goes here, I was thinking that it was going to continue down, but it went up, and now it's going down. So I was correct in my assumption, but the timing was not off. Now, I didn't put any money into this here. I did have some money here, and I lost here, but very little, because I thought the market was going to continue down, which it is now. But again, there's a whole month in here. And if I have contracts that are expiring within a month, then I'm in trouble. So I usually buy my contracts 2 to 3 months out. And even if I did buy it 3 months out, and by the time it does come down here and I'm making money, it's not going to be a lot. So that's why you want to make sure that you buy your contracts as early as possible, meaning that you want to hit this thing when it starts going down. Not over here, but right here. And so waiting for these spikes is a good indication. Here's a spike here. I could have bought down in here and still maybe lost a couple weeks. Still would have been in the plus here. But of course, it's better to hit these other spikes. And sometimes what I do is I'll buy some positions here, but not so big. And then as it starts to come down, I'll continue to buy. So if I buy 10 contracts here, market came up and went here, then I got to wait. Then it came up here, now it comes down. Now I can start buying again. And then down here I can start buying again. Below this line I'll start buying again. But then I have to know where this market is going to eventually turn around and come back up to correct, because all markets correct. They come back up, they go down, they come up. Because again, even if I did buy positions here and they came up and corrected and came down, then there's a whole month in there, and these contracts aren't really worth that much. I mean, they're okay, you still make money, but you know, I want to make as much as I can, squeeze as much as I can out of these. So I want to hit this before it hits that correction. So that's the target now. Where's this market going? We've got this week. It's probably going to start slowing down, and maybe the markets are going to start moving slower. I'm not sure how that's going to work out yet, because Christmas is right around the corner. So at this point today, if this market starts coming down somewhere around this area, pretty much straight down without correcting, then I'll probably get out, because then we're going to be due for a bounce. This market can't go down without hitting some kind of correction. This is a pretty good correction here, down here, but this little correction isn't enough to really get out. You know, if it took a long time and then corrected, then yeah, because again, the options have a time value on it. Let's call it intrinsic value. And so so you have to be careful with trading options. You can make, you know, 10, 20, 30, 40, 50 times the money that you can trading stocks, even 100 times, 200, 300 times. The only thing is you have to time it. And in order to time it, you have to figure out when to get in. And like I said, this is a good indication here. Plus, I can feel the market. Your intuition has to play a big part. So that's it, really. That's some good information that you can take with you. I'm not going to look at any of the underlying stocks. Well, maybe I will. Okay, I'll take a look. Okay, so here's one of my favorites. Here's Amazon. So Amazon clearly made a new low today. And as I had mentioned, even way back here when this market went up, you know, the market came from here and it went down and it came up, and markets retrace 50%. Later on, I'll get into this Fibonacci. I don't really use a Fibonacci a lot, but or hardly use it at all. But this is good information if you want to see where this market's going. And this market started here, it came down, and it retraced about 50%. And that's what markets usually do. They'll come down and retrace about 50% and then get ready for this next move. This one came down, retraced a little more than 50%. They usually retrace between 50 and 60%, depending on direction of market, of course, and how much power it has behind it. But anyway, I'll get into the Fibonacci before, but this actually came down and hit the 50%, almost exact, and now it's down because we are in a bear market, so of course it's going to go down. We're in a bull market, then it's going to start coming down, retrace, and then go back up. But that's not the case here. Went down, hit exactly the 50% mark, and it came down. Now it's at a new low. Where's it going? It's at $85. I think when this is all said and done, Amazon might wind up in the teens or even single digits. All right, here's another favorite of mine. Tesla is continuing to make new lows, going down. And so the market started here, came down, never retraced. You know, it came down here, a little bit of retracement here. Not much of retracement, so that shows that it's pretty weak. So eventually, when this market, you know, all markets retrace, no matter which direction they're going. Oh, I'm already at the max here. So when this market starts coming down and it doesn't have a big retracement, and it has to have that sooner or later, and it starts coming down, let's say wherever, let's say around here, it's going to retrace probably back to this line and then turn around and go down. And that's where a lot of people get fooled, because it goes down. They think they're losing money, and they are, and then it retraces and comes back, and now they think they're making money, and they're going to stay with the market. And it's going to keep doing that until they have $0. And that's the psychology of this market. That's how it works. All right, so here's Apple. Same thing with Apple. It's making new lows once it breaks here, but it continues to go down. And you got all these spikes, good indication, downturn. Market's very weak, extremely weak. Apple's at 135. Where's it going to go? Probably same thing as Amazon, back into the single digits. And that's it. So the only reason why I keep track of these, I don't necessarily trade them, because you can make some money on these, but I think out of all these stocks, the only one you can make money on that's equivalent to the ETFs is Tesla, because Tesla has a lot of volume in it, and I would trade this. These other ones, not so much. You can make some pennies here and there. I call it pennies because it's not a lot. Why would I trade that when I can trade an ETF? Now, once in a while I do get into these because I see an opportunity. It's not very common though, but it happens. But again, Tesla's the only one out of all of these that, I'll give you an example. So these are Tesla's options. And right now, this is at the money right here. So here's the volume and open interest is really high. It's almost like an ETF. It's way more than the other stocks. And even though there's not a lot of money that's being made right this minute, Tesla's down about $2, because Tesla sometimes moves $10, and I've seen it move $5 to $10 easily in a day, even more. And that's when these numbers start to grow, these green numbers here. And open interest and volume, like I said, is super high. So that means a couple things. One, a lot of people are trading this. That means you can get into the market and out without any problem. There's no lack in time. As soon as I press that button, I'm in. And I press it again and I'm out that fast. And you can make a lot of money on this because it moves so much. And there's so much interest in it. Way more than all the other stocks that I have listed in here. Not even close. I'll just give you an example. Take Amazon. Amazon's starting to move, but this morning this is pretty empty here. And you can see there's a lot of open interest and volume here, and these markets are starting to move in here. This morning is pretty empty in here. So later on in the day, it starts to gain interest here. And so this would be another good stock to trade. But it's not as good as Tesla. At least today it is as good as Tesla, but it's down $2, and for Amazon that's a pretty good chunk. For Tesla, that's not really big, but for Amazon that's big, and that's why it's moving like this. But not as good as the ETFs. ETFs you get more. Although Amazon's doing really well this morning, going down. So it's like I said, it's made new lows. So a lot of people, not a lot, but there's the smart people, I can say, are actually on this, and they're trading this down because they know Amazon's just going to keep going down. And it's a good stock to trade, up or down. And the people that are trading up, that's how much money they're losing. But you can see the volume and the open interest on this isn't as high as over here. So there's way more people trading this down. And if you take, Airbnb stock, it's pretty dead. There's nothing happening here. A lot of empty spaces. Not too many people are interested in that. Bank of America is, nothing there, you know, it's pretty dead. So you got to be selective in these stocks. Here's Etsy. Again, a lot of zeros in here, nothing happening. So I was in this market here, but then I got out, even though the chart shows I got in here at the very top, and it's down here now, and eventually it's going to it'll break down and come down in here. But the only thing, I got out with a tiny profit, because I just poured all my money into the ETFs at this point because they're doing really well. But you can see here, there's just a bunch of blank spots. It's like, even though the market went down quite a bit today, almost $2 for that company. That's pretty good. Not a lot of interest going on. Sometimes there is, sometimes there's not. It's kind of hit and miss. But I don't want to mess around with anything that's really small. Same thing with JP Morgan. Not a lot going on here. And then again, compare it with Tesla. There you go. Look at that. There's a lot happening here. In fact, today I would even compare this with Amazon. Amazon might even be a better trade than Tesla today, because Amazon made a new low. A lot of interest on Amazon going down. So everything I was just talking about with the different stocks, that's why I keep watching them, because they change. And like I said, Amazon's really good right now because it's going down, broke new lows. The other ones, not so much. There's not a lot of interest. But it does tell me a couple things. This morning, a lot of my alerts went off, and that means the underlying stocks are continuing to go down. So even though this ES hasn't really broken a new low here a little bit, that means that it will. Eventually it's going to come down here. Like 99% sure it's going to do that. Why not 100%? Because, it could turn around and go back up here before it comes down, but I don't see that. Like I said, the underlying stocks are dragging this thing down too. So they drag each other down. So if this goes down and the other stocks are going up, eventually those stocks will turn around and go down, because they do follow each other. So that said, I follow those other stocks too, because sometimes you get a good buy. And like right now, Amazon and Tesla are really good going down. Amazon a little bit more than Tesla, and I'm surprised. But sometimes the other stocks, they start picking up and they go down, and those are really good trades too. But you don't know until you actually follow them and watch them like I do every day. But nothing beats the ETFs. ETFs are always doing well. Today, actually, since I traded SPYs, it is coming down. Let's see how this compares with Tesla and Amazon. So I'll try January. Well, obviously the volume and open interest is higher, no doubt. 128,000 open interest. That's how many people have interest in this stock. How many people are actually trading it today is the volume. And you can see right here, not really moving a lot. Tesla and Amazon are moving more than this, and that's pretty unusual, but eventually this is going to pick up. Now I buy options. Here's one of my options here, and this is up quite a bit, 1.96. So it's up. Once you start getting into the money, then of course the options are more expensive. It's almost $20,000 for 10 contracts on this. But look at what it's moving. I'm sorry, it's 19,000 on this side. But look at how much it's moving. But when you're in the money, the difference between these two lines, this line here, this and this, doesn't look like it's moving a lot, you know. Not much going on until this market. So the ES is only, well, this is a SPY. Let's go into the ES. And then I'll go into charts. So it's only moved about 22 points. It's really nothing. You know, once it starts getting into 50 points, then it's doing okay. But once it gets to 100 points, then you're really making a lot of money. Then it starts to grow extremely fast. And then over 100 points, of course, then, you know, you're wealthy. But it's, you know, 22 points is nothing. And this is just the beginning. Like I said, I expect this thing to go down. And hopefully today. Let's see what the Russell's doing. Russell's broke a little new low here. Continues to go down, but it's just chugging along. You know, it's not moving with any great speed. And of course, the speed of this attracts more people. The options start to gain a lot of value in there. And when it starts to slow down or even retrace, when it comes down here and it retraces, it loses interest, and then sometimes you lose a lot. If you got in here, came down here and it retraced, you might be at even or even at a loss, a little bit of a loss, only because it's that retracement just sucks a lot of that out of the interest out of it, at least for people going down, and for put options. And that's why you want to time this just right. You buy here, I wouldn't get out here, but right here I would get out. But how would I know when to get out? You know, that's the other thing. So like I said, you hit these bars here, and then you get this other third bar going up. Definitely would have got out of this position, because that means it's starting to retrace, because it hasn't really retraced a lot here. And now it's time for a retracement. How far it's going to go up, that I don't know. And so I'll keep talking about this as it goes on. This is the tricky part about trading, is you have to really feel these markets. All right, that's it for today. We'll see what happens. I expect this week, hopefully, it get down in this area, and then that's when I'm going to be selling, because when this came down here, it didn't retrace very much. So that means it's going to continue down. Eventually, it's going to have a correction. And I would expect that correction to be somewhere in here, unless this thing for some reason just shoots straight down, hits this mark, and then corrects. Definitely, if this shot straight down to here in the next couple days, I would definitely get out my position, because I've got some really big support. Even if it went below, I don't care, because eventually it's going to retrace and come back up. All right, so that's it. We'll talk tomorrow.